So hey there, this is already the 11th chapter of the book. It's about point and figure charting. This is a really old charting technique. I think it dates back 150 years, which is well, quite old. The thing is, I did not even see it before I read this book, so it must be old, right? Because the book is somewhat old. But yeah, I'm really used to candlesticks, so getting into these ones was kind of a new thing for me. But there are key things about candlesticks, or sorry, point of figures. So I'm just gonna get over it. All right. So basically, every X, as shown here, a green one is sort of something to the upside. The price goes up, and the O's, the red ones, will be the price goes down. Now, the key takeaway is there's no time frame. This one is kind of misleading at the bottom, but this downtrend could last weeks, but it could also last a couple days, right? It's you really don't know, and you can see it clearly when you switch over to candles. You can see, for example, this rally is already going on for, what is it, like 2 weeks, no, 70 days. And if you switch over to point and figure, you can see it is literally this chart, right? You don't know how long this took. You don't know how long this took. It might say 137 days. Well, like, okay, well, fine. But the timeline is kind of misleading. But it does create a couple of great buy and sell signals. But I'll get into it in a minute. So how it works is this, basically. Let's get actually started with this one. So basically, the price reverses, or the point and figures reverse, when it goes 3 boxes down. So basically, let's say we're at this point here. Price goes up, 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 up. I can't draw. Why not? Oh yeah, right. Price goes up, 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 up. Oh, it's the annoying drawing. Well, never mind. Price goes up, and it needs full numbers. So it could be that right now we're at 33,000 or 3,300 and some change. But you need full boxes, and those boxes are mostly total numbers like 50, 10, 1, or like 500, depending on the price. But you can even change these things. So, for example, the reversal pattern happens when the price goes down 3 boxes. So it's 1, 2, and 3, and then you would go and write down 1 here. So I don't think you will ever see one of only one downtrend, but I don't see it. Maybe. But you can also change this one to, let's say, 1.5 reversal. You will get much less results. Like this was only like 30 or something in, like, what is it, 2018 till now. So but yeah, it skips a lot of price action, and you don't know how long these rallies took. You might see, oh, this last strong rally. Well, this could take literal years, right? You don't know. That's the thing, you don't know. And that's also a key takeaway when using point and figure charting. It's always best to start big, let's say on the hourly, because you can always go from hourly to like daily, but you can never go from daily to hourly because you're literally missing data. So that's always something which they did. But the thing is, they would have the newspaper with the stock prices, and they would just write it down and press an X if it was still at the same level, or what didn't decrease like 100 euros or something. They would just write an X, or nothing if nothing happened, but they would just wait it out. And yeah, I don't think it's not an accurate, but it does create a couple of great buy signals. What do I mean by that? Well, you can see here, this is sort of the point and figure sort of point system. So basically what it does is the stock price of Ethereum is above 1500, so it's between 1000 and 2500. So every thingy is 50 euros. You can see this one is 1, 2, 3, 4, 5, 6, I believe. So this one should be 300. It's 400. So what I think it does is actually measures also the price of the 500 extra, which is in here. I think it depends and gives it even more value instead of 50. I'm not sure, but when you check on something like Bitcoin, you can see this kind of true, because let's take these 3 values, for example. This one is, sorry, this one is 1500. So it's about that price. I'm not gonna go into that one, but you can see this is quite accurate. They're probably using some other formula to depend or make it a bit bigger, because, well, you don't need to really round it up, as the computer can do it for you. So it's not that much work anymore as it was used to. So yeah, I'm just gonna get into a couple things which I took from the book. And to be honest, I'm not an expert on this, definitely not, because when I was reading it, I thought it was really boring. So yeah, let's get into it. So first of all, we will have, oh yeah, what I already told you. Always, let's say this is the daily candle and this is the weekly. You can see much more information on the daily candle than the weekly. So you can see you can never go back from the weekly to the daily, but you can always go from the daily to the weekly. So always keep that information there. Now, this one is about um, sort of a trading strategy of counting the numbers of like a sort of a cup, and then faking all the numbers back on where it should land. I'm not sure, right? It's a congestion area. I guess it's just speculation, but maybe it works. I don't know. Don't take me on word. Yeah, so these are quite a lot of trading strategies. You might not be able to see it that clearly, but basically these are, they were like really similar to all the theories I had on the candlesticks. So you can see you have a fulcrum. Of course, you have a compound fulcrum. Delayed ending, which is not that common in candlesticks, but more they would use it on the RSI, I believe. Of course, you have the inverse head and shoulders, the V extended. Never heard of duplex horizontal, but I guess it's just two levels of horizontal levels, and the saucer. I always thought saucer was a great word. And here you have all the inverse or inverted methods, basically appending to this one. But you can use these ones. I guess scan them here or anything. You can use it. Now these are other trading strategies as well. This one is a bit unclear, but what would happen is these top two are simple formation. So a buy signal would occur when it reaches above the sort of the previous up candle. So you would always have up candles and down candles, right? You can never have two up candles next to each other. So the previous up candle or up point. And of course, this one is same for the sell signal as well. This one is a rising bottom, but it's almost the same as the top one. And now here we get into a bit of more complex formations, but you can see it speaks for itself. This one is basically the same as this one, but then having two tops. This is sort of a trend line as well. This one is a triangle or like an apex forming. This one is a breakout. Like it's quite the same as candlesticks patterns, right? But the thing is, I sort of take my standard as the candlesticks. But of course, back in the day, this was the standard. So actually, the candlesticks is the sort of the baby of this, I guess. But it's still, yeah, it's still. Yeah. Now let's get into this one. Yeah. So people use a whole bunch of fancy methods and stuff. For example, here they use this box and they would triple it to the top side. So this was the potential, and then, well, that's what I did, right? You can practice it. I'm not really gonna find it or anything. And now this one was an interesting one because I felt like, well, every time I tried it, I got a positive trade. Well, not really, but just looked on a chart. So basically, what happens is, whenever the price goes below the bottom of the rising prices, you would go for a short. And you can see every time, like right here, it goes up, and then the price goes down, and you would go into a short here. I'm not sure when you're supposed to sell it, but I guess when a new X happens. That's a good one. And you can see here it doesn't reach below this one, so you would never go into a short. Here it does go, you would have immediate profits again, you would sell here, and then you would go into a short again here. So I guess it's really, it does take some, I think it makes quite a lot of profit actually, because I didn't really see a moment where this didn't work, but it seems like a pretty solid strategy. But I guess when you're trading like this, you can literally move, like wait 30 days for a trade. That's quite a long time, but you can try it in an uptrend as well. But I think you can see when the green one exceeds the red one, you can go for a long, and you can see you can actually make quite a lot of percentage based off of this. But yeah, I'm not sure, you know, here this would happen again as well, but it's not really, you might still make a couple percent, but I think it's better in an uptrend or a downtrend. But still, works pretty great, right? Now I think this is the last one. Yeah, this is the last one. This is another one of those fancy methods which they use. Yeah, I'm not sure I'm really gonna get into it, but they will use the base, and it was logarithmic, sort of point of figures